I came across this study talking about how just $50 invested every single week, which is not a major amount of money, can make you become a millionaire. And these are the returns over time of a traditional 8% investment, which is rather conservative in my opinion. How investing $50 a week can eventually make you become a millionaire if we assume a decent market return. And it's really shocking to see how little amount of money it really takes as long as you're investing for the long term to become a millionaire. In this video, we want to reference one of the best investors of all times, especially during the 70s and 80s period, which is Peter Lynch. He's one of the most impressive, well-rounded, just overall best stock market investors to ever play the game, and in my opinion, he's one of the people I look up to the most. Now, we're going to talk about some of the answers that he had in an interview from a long time ago. We're going to talk about historical performance, what the stock market has done over the long term, what I think it's going to do over the next year, 5 years, 10 years. We're going to put in our investment calculators. We're going to use an example comparing this $50 example of just investing $50 a week, if that's a realistic return, and then we're going to relate that to myself, what I have when I'm investing and what it will look like by the time I'm at a standard retirement age of 65. Finally, we'll look at the major indexes, look at what they've done over the last decade on an actual lined out chart, and talk about what you should be doing right now. Because guess what? When you look at the stock market today, you can see that year to date, it's down 15.5%. When we look at the Dow, which is another major index, it is currently down year to date about 6%, not as bad. And then last but not least, we have the worst in them all, which is the QQQ, which is tech heavy companies, is still down 27%. And I want to talk about why that gets me excited as an investor. You should not be looking at this and getting scared. You should be excited by this because you're about to build a ton of wealth. We're going to explain exactly why that is in this video. So guess what? You might be watching this and you might be a noob. You might have no idea how to buy stocks. You might be brand new to the market. You might only have a couple hundred or a couple $1,000 to start with, and I'm going to show you how to do it. I'm going to show you how to play the game, how I've grown my portfolio to $1,500 with my initial investment is now up to $41,648, which we show at the beginning of each video. This is my balance since tracked my YouTube channel back in April of 2020, about 2.5 years ago. With my $1,500 initial investment, I've slowly grown it over time to today's portfolio balance of a little over $41,000. If you want to see my holdings for my growth portfolio, these are the 4 companies I own right now, and then here's my performance versus the major indexes. Now let's go ahead and start off by taking a look at this and take a look how just $50 a week, which is not some crazy amount of money, can help you become a millionaire by the time you're able to get into your retirement age. If you want to see how to invest in these companies, the ones that we're going to show, you can invest through M1 Finance, which gives you a free $10 for signing up when you use my referral link down below, and you would help support me in the channel. Thank you guys for tuning in. Let's go ahead and get started. Now you see this chart over here. It talks about Charlene becomes a millionaire accidentally. And notice how in the first year of this person investing $50 a week, they make $100 in the stock market over the first year. That's almost nothing. The next year, they triple it. It goes up to $320. Okay. The next year, $500. The next year, $800. And then we start getting to the thousands, $2,000s. Eventually, a decade or two later, we start getting into $10,000. Making a free $10,000 from the stock market every year is pretty impressive on top of the $50 a week she's already saving. Fast forward a little bit later, then she's making $20,000, $30,000, $50,000. By the time you get to the end of this chart, her last year, she's making $83,000 a year just off of the stock market going up. And notice that this investment here isn't some type of major gimmick. It's not some lottery type of system where she hits big and gets real lucky. And obviously, an 8% return over the long term is pretty decent, but it's not anything that's out of the realm of possibility. How do I know this? Well, let's go ahead and put our calculator here. What we're going to look at is September of 2022. It's the most recent data, updates every couple of months on this chart. And we're going to go back 5 years. We're going to calculate to see what the returns were with dividends reinvested. Okay, the average return over the last 5 years is almost exactly 10%. It's been 9.975, okay? Let's go back 5 years more. So what was it over the last 10 years? It was 11.8%, okay? Let's go back another 5 years. Well, let's go back to 2007 right here, and the long-term return was about 8.3. Let's go back another 5 years. It was 9.5. You get the point. I can keep on going back further and further, and different time periods produce different results, of course. That's how these things work long term. But notice as we start getting really far out here, the further out we go, the long-term average generally trends around 10%. We could see a little higher, we could see a little lower during certain specific time periods, but over the long term, around a 10, 20, 30, 40-year period, typically 10% is what you're going to see. Just an example right here, over the last 60 years, we've produced a 10.26% return, and that's a pretty average return, and that's generally what we trend towards in the long term. Now, when you typically see outperformance, it's during time periods where we have bear markets, when stocks go down, because you get to buy them at record low prices. Let me give you an example. Let's say you started investing in 2007 and you held to today, your average return year over year would be 8.3%. Now imagine if you started in 2009. Just 2 years later, your 8.3% would have increased to 12.2. And that was in the bottom of the recession. Because if we look at these long-term charts here, you can see that there's been up times, there's been down times, but generally speaking, every time when you wanted to buy was when things went down. So for example, if you look at times when the stock chart goes down, that's typically when it leads to big roaring bull markets shortly after in the years coming. For example, during the Great Depression, right around here, the time where I'm moving my mouse, you can see that generally we receive a huge bull market upwards. What about during the 1970s, right here where I'm putting my mouse? This is right around the time we had the 1970s recession, and we even had a little dip here in the 80s, on the little coming up here, and generally speaking, things went up. We had that 1987 flash crash, the huge Black Monday situation that we had, and stocks went up. You get to here, you get to the dot-com bubble. After things dropped, things started to recover. You get to the Great Recession, where we were just talking about, things recover, and then you get to where we're at just a year or two ago during COVID, things dropped, and guess what? You guessed it, things recovered. Generally speaking, things recover over time. And this leads me to Peter Lynch's interview question. He's one of the most impressive people on the planet when it comes to stock market investing. It says here, the beginning, this is the question by the way, the beginning of the bull market in 1982 environment, were you surprised? 1982 was a very scary period for this country. We've had 9 recessions since World War II. This is the worst with 14% inflation. We had a 20% prime rate, 15% long governments. It was ugly. And the economy was really much in a free fall, and people were really worried, thinking, is this it? Has the American economy had it? Are we going to be able to control inflation? I mean, there was a lot of very uncertain times. You have to say yourself, I believe in it. I believe in stocks. I believe in companies. I believe they can control this. And this is an anomaly. Double-digit inflation is a rare thing. It doesn't happen very often. And in fact, one of my shareholders wrote me and said, do you realize that over half the companies in your portfolio are losing money right now? I looked up and he was right. But I was ready. I said, these companies are going to do well once the economy comes back. Once we get out of every other recession, I don't see why we don't come out of this one. And it came out once and will come back, and the market went north. Now, this is what's interesting. You notice his mindset here. Even when he looks at companies that typically lost money during the 1980s period, which was right around here when things were kind of stagnant, we started to trend upwards, and it ended up being a huge bull market because that's right around the time inflation started to peak and interest rates started to go down. Now notice he was talking about the same worries. People were worried about the economy, people were worried about growth, losses were coming up, and overall, just in general, people were worried. His exact quote was, is this it? Has the American economy had it? This is talking about the 1980s period. We're seeing the same type of comments about inflation, economic growth, and all the other stuff happening today in 2022. And notice this leads me to the next part of this where the question was, nobody told you it was coming? He said, it's lovely to know when there's a recession. I don't remember anybody predicting 1982. We're going to have 14% inflation, 12% unemployment, a 20% prime rate, the worst recession since the Depression. I don't remember any of that being predicted. It just happened. It was there. It was ugly. And I don't remember anybody telling me about it. So I don't worry about any of that stuff. And then the most important part of all this, he says, I've always said, if you spend 13 minutes a year on economics, you've wasted 10 minutes. So this is the key here. Don't try to predict where the stock market's going. And this is not something I try to do myself. When I'm investing in these companies, Google, Salesforce, Amazon, I'm not trying to guess what the economy is going to do on a macro scale. Let's look at Amazon for example. Is Amazon's business still growing? Okay, well last year they had a huge boom, they grew 21%. Well, how are they doing in 2022? Despite the recession, they're still growing 14.7% as of the most recent quarter. That's a growing business. What about Salesforce? That's my number one investment. If you look last year, the company grew overall 24.66% right here. How are they doing in 2022 in the recession? This company is still growing 21.77% as of the most recent quarter. That's pretty dang good if you ask me, and I'm okay with those results. Now, the recession and the 2022 stock market in general has been awful, but my companies are doing fine. And I'm investing in them for the long term, and I'm not trying to waste that 10 minutes of trying to predict every year what the economy is going to do, what the stock market's going to do, because I'm going to invest in these companies for the long term. Same thing with going back to this chart here. Investing just $50 a week over an 8% return will make you a millionaire based on these calculations. Now notice how we calculated earlier, the average is actually closer to 10%, and there are times when it's higher, lower, so an 8% is pretty conservative, but when you get the biggest returns, it's times like now when we're in a downturn. Now what I want to do here is I'm going to plug in my own little calculation. I invest $500 a month, and we're going to look at my numbers here in a second. But right here, we have a $0 starting investment, investing $250 a month. That's half of what I do. I put in $500 at the first of the month every single month. So pretend that you're only doing half of what I'm doing and you don't have my money invested. Today we have $41,678. Pretend that you have zero and you're only investing half of what I do. Now pretend you're age 30. Right now I'm age 23, so I'm pretty young to be in the game, but pretend that you're age 30 and you want to invest till you're 65. Just assume the average 10% market return, and over time, this will make you almost $1 million with only a $250 monthly investment. That's more than most people's car payment. Now let's look at mine as an example. I currently have about $40,000 in the stock market and I invest $500 a month. I'm 23 years old, so if I were to wait until I'm 65, then I would have about 41 years left. Now actually, notice here, I'm 23, it's about to be my birthday, I'm 24, so I actually knocked a year off of this, but you get the point, assuming an average market return of 10%. If I were to wait till I'm 65 and just keep on putting in $500, this would reach about $5 million by the age of 65. And you can see that over time, generally speaking, we've seen returns like this. Because even when we look at the S&P 500, the Dow, the NASDAQ, and if you don't know, this is basically the American economy put into one number. So if you're not familiar, if you're new with stocks, Google what these are. These are stock market indexes. These basically give you average returns. You can see that generally speaking, these have produced anywhere from about 12 to 17% over the last 10 years. And that even factors in this downturn in 2022. As you can see when I'm highlighting my mouse right here, these were actually a lot higher. They just went down during 2022. And we'll see where this thing pans out in the future. And so guess what? I don't know where stocks are going to go. I don't know if we're going to go higher. I don't know if we're going to go lower. But what I do know is in the long term, on a long-term basis of 3, 5, 10-year period, the stock market's going to go higher. And as long as you're investing in profitable, growing companies, the stocks that you're investing in are probably going to do just fine. For example, if you're investing in companies that are burning cash, like for example, let's look at a Carvana, one that I'm personally projecting is likely going to go bankrupt this year, okay? Let's pull up Carvana stock and see how their company's doing. Okay, this company is currently at $8. If you look over the last year, this company's been awful. This company was a $370 stock and now is down to $8 because the company has been losing money. You can see from their losses here, they're losing money consistently year over year over year. I also just made a video about a company like Tattooed Chef. This is a company that cannot make money. They lose money quarter after quarter after quarter. And what does their stock price do? Over the long term, it trends down and it's likely never going to recover. You can't even see it. It's getting so low on the chart, you can't even put it on here. However, if you look at growing companies, companies that are growing their profitability, like an Apple, over time has been growing their profits, not losing money, but instead making billions of dollars on the bottom line, their stock price on a long-term time period typically goes up. It's that simple. Sometimes investing is so simple and we make it so difficult, and as long as you stay invested, get through these tough times, and if you're a new investor and you're wanting to get started, now's the time to do so. If If you want to see how to do it, you can stick along with me. I'll show you how to do it along the way, and I'll show you how I do it and whether I'm making profitable or unprofitable investments. Regardless, I'm going to show it on the channel no matter what. Thank you guys for tuning in. Thank you for watching all the way to the end. Subscribe if you haven't already. Get signed up with One Finance for a free $10. And other than that, guys, thank you so much for watching, and I'll catch you guys next time.